Good afternoon, ladies and gentlemen, and friends from the industry. It is always a great pleasure to be back with you in a conference that 2ET Edge Summit year after year and share all thoughts with the best of the brains in the industry. Well, it's my privilege and it's also great pleasure today because today the sessions are going very, very well, extremely focused on growth, innovation, and optimistic despite the situation that we have been faced. Because any meeting nowadays and discussion across the world, it begins and ends with COVID-19 and a bit of gloom and doom. Well, the world has changed, no doubt, and it is going to change further. But it's not just due to COVID-19 or a pandemic. Many of these changes that we see nowadays are accelerated, or merely accelerated by COVID, the whole COVID crisis, but they were there. Digitalization, the move towards digitalization, move towards mobility, remote transactions, the whole payment revolution, social distancing through social media, environmental issues, scarcity of capital, increased regulatory supervision, longevity of people without adequate pension, geopolitical tensions, nationalism, localization, different employment types, skill gaps. So these are all there in all industries and very pronounced in insurance industry. However, attention to these have been refocused and been re-energized to this as we sit back and repair, and we are past the repair stage. The repairing is done. Now it's time to rethink, re-strategize, reimagine, reconfigure, and sort of relaunch the entire new in insurance movement, as you can say. Well, people talk of several macro things happening. GDPs are contracting or GDPs are not showing enough growth, capital scarcity, corporate defaults, which can all reduce ability to invest. So on a macro level, risk modeling will go up. That's what seems palpable. New investors into insurance are appearing, especially private equity companies. And there is the scope and possibility because of the tightened condition of capital and finances of more mergers and acquisitions and more consolidations. If we come towards the micro side of the impact and the overview of what's happening, and I promise not to bore you with too many numbers, but I'm trying to give you a flavor of the trends. Well, impact on the industries has been very different across industry, like hospitality, transportation, travel, automotive, uh, non-essential consumer goods, chemicals, energy, freight. These all have been very severe. While some others like telecom, essential goods, healthcare, technology, pharma, social and life sciences, and as well as agriculture, they are witnessing normal to supernormal growth. So it's not when insurance companies look at the scenario and they look at what to insure, how to insure, what is happening to their clients, and look at capital, it's a mixed bag. And one has to figure out how to win in these situations. It is interestingly poised because while a pandemic or a global crisis is something you will expect people to really take to their heart and go and queue up to buy insurance, well, they're not doing that. They're actually queuing up to buy cell phones and other things on a Black Friday sale all over the world. So, which means that behavior, the consumer behavior, has still not substantially changed. Insurance still is not that high a priority, which has to become. If you look at all the highly penetrated countries, well-developed economies, one common factor is, or the two common factors are very strict and well-developed regulations and kind of, I'd say, different priorities in spending money and investing money. So looking at insurance as a very important risk mitigating tool right up there and not being pushed into buying insurance. Well, for insurance companies, investment avenues are changing with squeezing corporate debt. Distribution remotely, not face to face, has become is hard. It's very very hard because insurance is a product which is explained across the table, even with or without technological tools. But people are adapting to it, and a new normal is emerging where a hybrid method probably will sustain. Well, less disposable income with squeeze in certain industries might reduce the propensity to take insurance, and confusion over the new covers and COVID covers, as well as higher regulatory scrutiny, may come and pressurize insurers more. At the same time, there is a pronounced growth seen in health insurance. There's definitely a positive momentum. And as the more and more society readjusts and becomes more mobile, we are likely to see more of motor insurance, more of travel insurance. These are the areas which have been hurt the most. And of course, large scale industries, new industries coming up, which can boost the entire insurance landscape. If you think about it, the bottom of the pyramid still remains the government's domain. I mean, that government has to take care, and government is doing great job with the PM schemes. And I will talk about uh, some numbers there. The private and public sector industry actually has to take the baton on from where the government leaves off. When the government starts taking the BPL and above the poverty line is where the insurance industry should take care. But unfortunately, there's a big gap. Insurance industry normally looks top down, looks at the affluent centers, and the cities and the population centers naturally for economies of scale to get talent, to get distribution talent, staff, as well as business. So people in the middle, people who are in smaller towns who can buy insurance are today left out, and that is where the exclusion is highest. Well, the digital consumer is rising. A majority of the new consumers being added to the whole economy are digital consumers. So maybe we can finally see the shift towards digital buying of insurance at a much larger scale than that has been seen so far. So what are insurance companies looking at? They're looking at financial stability and capital at this time. They're looking at digitization. They're looking at new strategies for growth, new channels, new options. Of course, operational efficiency, how to make it lesser and lesser cost operations, being more nimble so that future any kind of crisis can also be tided over. The workforce and workplace is changing. Remote workforce, remote workplace, as well as the whole thing about uh, the attitude to digital, understanding how people will collaborate, gig economy, everything is coming in and hitting everybody straight on. That future is already here. Regulatory compliance, well, increased emphasis on that, and a focus on something which the insurance industry has only lately woken up to, which is environment, society, and governance, commonly called ESG. ESG is something which typically manufacturing companies have had caught on to it earlier to reduce greenhouse gas emissions. But net zero has become also a goal for insurance companies. Many insurance companies have declared net zero goals. At PwC, we have also, as a consulting company, we have also announced a net zero uh, goal by 2030. The whole issue is that unless everybody commits to it, net zero is not going to happen. It is not a question of a chemical company or a factory who's spewing out gases, because even companies which are service oriented companies or insurance companies and financial services companies, they have vendors, they have supply chain, they have practices, travel, which all ultimately result in higher emission of greenhouse gases. And net zero means that at an overall level for full operations, there's zero in emission finally. So that's the kind of goal. Relooking at ESG is going to be very important for insurance companies, especially as private equity companies, PEs are becoming a large investor because they look at ESG as a major component. Customers will want same or higher levels of attention. Despite all of these changes, their higher quality of services, faster, better, cheaper products, better quality of conversation, better quality of advice, and of course, hyper personalization at scale. All of us are afraid of our data getting out there, and God knows who has my data because I'm giving it away in so many apps in so many places. But then when an insurance company comes to me to sell, I expect them to know me better, not ask me 25 questions for me to talk about what I need. Technology is undergoing a very big sea change. It is unseen, a little bit below the surface. But instead of choosing technology, one-on-one technologies or buying software, a trend is towards platforms and ecosystems. The large platforms which have emerged from US, from China, and this whole large platform situation where people hook onto the platform. So ERP platforms, there are policy admin platforms. People can hook onto them through the cloud. And we just had a cloud discussion, so I'm sure you can resonate with that, what I'm saying. But consumer engagement is going to be key. Consumers have to engage, and your distribution and staff have to adopt. And therefore, I like the point about culture, organization culture. If organization culture is not attuned to adopting digital, it will become thinking analog and digital and just merely automating it. So API microservices, data privacy, ownership of data, data governance, cybersecurity. These are all the issues which will be talked about heavily now in boardrooms, not just at the technology sides. Many innovations like 5G will completely change some stuff. They will take away arbitrage of time. They will give more and more instantaneous stuff. LIDAR, with the through which the automated cars run, with 5G, the response will become better, and certain things can become more practical. Battery technology increasing can become more practical. The more practical they are, the more you will see adoption. Pharmacogenetics for precision medicine, so as to make sure people are treated properly at the right time, first time, right dosage of drugs, will reduce hospitalization and probably eliminate it. Deep analytics and robotic process automation all are important from technology point of view. From workforce, just looking at people and their motivation and their packages is not going to be enough. People have to be engaged further, because staff are not going to look at lifelong careers anymore. Gig economy is here. People are going to look at sharing their whatever talents they have and want to get paid for it from working from anywhere. The aspect of organization culture, making sure people are properly working together, all these challenges and the health and well-being of such people have to be considered. Digital upskilling is something which is on the top of mind of most CEOs, and as our PwC CEO panel survey this summer 2020 suggests, that digital upskilling is very important, because most CEOs, overwhelming 78% of them believe that remote collaboration is an enduring change. In fact, 76% of them believe automation will continue, and 61% of CEOs believe low density workplaces will be the thing of the past. And lastly, the gig economy will be here to stay. So the Fortune 100 today is totally different from that in 2000. Who knows? The leaderboard of insurance might change with all these changes. And in 3 to 5 years' time, you might find that the whole thing has changed. Newer names are there. India ranks low in share of global premium, 1.7%, but it's up from 0.4% 40 years back. The 11th largest market in the next 10 years should grow to be 8th largest. And with a focus on increasing insurance penetration and density, India has only positive things to look forward to. The problems which are there are not problems in insurance industry. They are about lower disposable income, low asset ownership, difficult to reach all corners, and low literacy. And premium levels are low. So therefore, probably it's time we looked at different measurement criteria, and not just a premium on percentage of GDP, but looking at maybe family coverage. I will end with trends which are required to be now pursued by insurance companies to make sure, and regulator and government, make sure that penetration and growth insurance happens. So simplicity of products, simplicity of policy language, vernacular language adoption, this is extremely important. Mobility in digital, no doubt, will help, but distribution reforms are required to make sure insurance can be ubiquitous. Education awareness at school level and college level. And finally, the last bit which will make all this come together is the attraction of the best talent to want to work for insurance companies and to want to sell for insurance companies, without which all this will be a lot of sound and fury, signifying nothing. Thank you very much.